Hello from another rather glorious morning. It's Wednesday the 2nd. I'm FX Blue and this is the market brief. So the UK recorded 0 COVID deaths yesterday. It's the first time in about 14 and a half months, or 445 days to be precise, that we've recorded 0. And whilst it might be due to the bank holiday weekend delaying the data, it's a significant milestone all the same. Perhaps indeed enough reason for the government to plough on with the full reopening plans despite the recent calls to delay due to the rising cases of the Indian variant. Sticking with the positive theme, data showed that manufacturing output grew at the fastest rate in nearly 30 years. PMI touched 65.6 in May, which is great news for the sector. Added to that, house price data posted a 10.7% gain, which is the biggest in nearly 7 years. But in the market, the broader outlook remains mixed, with most of the recovery story now priced in. But data like this can still move the needle. And indeed, it all helped drive sterling to a 3-year high against the dollar yesterday. We topped out just shy of 142.50. Inflation is still the big one though. That remains the common threat across the G7 economy. So a significant rise in this month's data could be positive for sterling, as it would drive the MPC policy discussions. Any hint of higher interest rates, or at least tapering of QE as a first step, would see demand for sterling increase, hunting that future yield. However, it's widely accepted that we're unlikely to see any action before the autumn. Over in the US, the recovery is being held back by a shortage of raw materials. But despite the supply chain issues, manufacturing output still hit 61.1, showing comfortable expansion and posing the question of how much stronger is real demand right now. I'm not sure that smoothing the supply chain is the kind of action that the market wants to see from the Fed, but it is needed all the same. This would help combat the risk of additional inflationary pressure as demand continues to outstrip supply. The other key issue that manufacturers are complaining about is the ability, or inability rather, to attract new workers to their businesses. A timely reminder of the important role the employment sector has to play in the recovery story. But as the weekly jobless claims continue to fall, this may sharpen focus ahead of Non-Farm Friday. The latest estimates suggest we'll see around 650,000 new jobs. Write that one down for Friday's sweepstake. But ahead of that, the dollar index remains in a bit of a state of flux. It looks like we'll need non-farm payrolls or indeed comment from the Fed to help break out of the current lull. Yesterday we slipped down to 89.65 as euro dollar was hemmed into a pretty narrow trading range between 122.50 and around 122.20 where we open today. So that may set the tone for the next couple of days as the market sits on its hands ahead of the payrolls data. We could be in for a pretty fruity end to the week. Roll on that sweepstake.
If you do not have a clue, then just tweet through and ask FX Blue.